Hey, mortgage rates have crept up a little bit over the last several months, which means we are seeing a comeback in adjustable rate mortgages, also known as ARMs. So we wanted to give you a sense, remind you or teach you about what adjustable rate mortgages are. Should you consider one, all of the pros and cons. So we brought in local mortgage expert Brad C. with Kentuckiana Mortgage Group. Brad, how are you, sir?
Well, I hope all is well with you too, Mike.
They're doing well. Hey, let's just jump right into the basics. Brad, what is an ARM?
Like you said, it is a adjustable rate mortgage. So you'll see 5-1, 7-1, 5-6, 10-1, whatever the first two numbers are. The first number being how long the interest rate is fixed for, and then the second number being how often it can adjust. So a 7-6 ARM is fixed for the first 7, and then it can adjust every 6 months after. 5-1 ARM fixed for the first 5 can adjust every, once a year after that.
Okay. And this is in contrast to a traditional mortgage, let's say a 30-year fixed rate mortgage where you lock in the rate when you close on the loan and it stays the same forever.
Until you refinance or sell the house.
Yeah, fair enough. Fair enough. So these adjustable rate mortgages are an option that usually come out when rates are high or rates are on the rise. So why would someone consider using an ARM?
So I think it's, it comes down to how long you plan on being in the house. Is this something you're buying your first house and I'm only going to live here for the next 2 or 3, and then we would like to upgrade or move to the country or whatever the scenario may be. So, I think it's an individual basis and how long you plan on having that mortgage, or, maybe a 7-year ARM, and we think that rates are going to come back down over the next 7 years, and you're eventually going to refinance if you qualify credit wise at that time. So a bunch of different scenarios, but I think the main one is, we're not going to really have this mortgage for that long, and so it reduces the risk.
Okay. And again, just at that very basic level, what is the draw today of an ARM? You've got rates rising now, so give me a sense of a 30-year fixed rate FHA. What is the rate today?
So today, I think rates, 30-year fixed par conventional, probably 5.25, 5.375, somewhere in that, low to mid 5 range. And then on an ARM, you'll probably be in the high 4s.
Okay.
On those. So, a little bit lower, but it does come with, like we talked about, a little more risk if you hold on to it for longer than the fixed portion.
Yeah. So the pitch that some lenders may make, or you may see on commercials, is that you can get that lower rate today. But again, let's go there. What are the pros and cons? I know we've talked about some of those, but other pros and cons that you can think of on an ARM versus a fixed rate mortgage?
I mean, the really pro with the ARM is a lower interest rate. And so I think it's just looking at the difference between, okay, what is, most ARMs are amortized over 30 years. So the monthly payment on a, 4.75 ARM or a 30-year fixed at 4.75 is exactly the same. But you have to look at the interest rate difference and the difference in the monthly payment. And then is that risk worth it to you? Or are you going to sell the house or do something different in the next few years? The pro for the ARM, slightly lower monthly payment. The con is if you end up holding it longer than that fixed, then you can have adjustments to your rate up or down.
Right. And that is part of the game, right? Part of the game with an ARM is that you're betting that you're going to do something to your benefit before that rate starts to adjust. And that could be, you believe that rates will fall before the adjustment starts, so you can take advantage of that, or that you may move or sell or get out of the mortgage altogether. Okay. Rates have been rising. We've seen a little bit of a pullback the last week and a half. in your opinion, is this a good option for buyers in the current rate environment?
I think it's suitable for um, it's suitable certainly for the home buyer that knows that they're going to be in this long, or maybe maybe you're in a situation where you're buying a new house, you're going to sell yours down the road, and your goal is to retire and pay it off in the next 5 years or whatever, and get aggressive. There are certain situations where I think that it is beneficial, but I would say that they're unique. I would say for most people, the payment difference between the two is, depending on the loan amount, can be fairly marginal, and that may not be worth the risk.
Yeah. Okay. So I guess what I'm hearing is really like all mortgages, it's individual. It's
Yeah.
borrower to borrower. And but with the arms, it's probably going to be a much smaller percentage of people who it works for. So Brad, people are looking at rates right now. Some people are getting a little bit of nervous, and that is again the appeal. That's why we're seeing arms talked about in mass for the first time in probably a decade.
Yeah.
So for someone who is looking at that, what are some other possible options that they should consider?
If you're looking, different monthly payments and budgeting for your house payment, I've had a lot of conversations recently with people that want to look at 20 or 15 year because of the rate difference. The shorter the term, the lower the interest rate. And when you're really looking at what your plan is for the future and what you got going on, if you can get a 20 or 15 year with a decently lower rate, and in most scenarios lower than what an ARM would be, and you're comfortable with the payment, you're going to be putting a lot more per month towards principal. So you're building equity much faster than you would be on the ARM or the 30-year fixed. Obviously, if it fits your budget.
Yeah, and let me get a sense of where we're at so people know. 30-year fixed versus 15-year. What are we seeing on interest rate there?
I would say the 15-year generally is about 1% lower.
Okay.
On
Okay.
whatever, depending on your scenario, but it's probably a general, pretty good idea of the difference.
So someone who's really just focused on that rate, a 15-year or even a 20-year could be a solution for us. Any other thoughts on other options?
Those are the really main options for most people. There are going to, there's veterans out there, and the VA loan, and FHA and rural housing for some situations. So when we're talking about these ARMs, I would say that is strictly the conventional loan space.
Okay. Brad, someone wants to get more information about an adjustable rate mortgage or see if it's right for them. What's the best course of action there?
There's a lot of good information on Investopia and a couple other websites on ARMs that really break it down and talk about like the caps. So like most ARMs have caps where the initial adjustment can only be to a certain amount, and then subsequent adjustments, and then there's a lifetime cap. So like say if it's 4.75 today, it can't go over. You can't get over 5% higher than that. There's a lot of great information out there, or they're welcome to reach out to me, and I'm happy to have the conversation and dig a little bit deeper.
Yeah, the adjustable rate mortgage is more than just that rate. There's lots to know and understand before you dive in there. Brad, I'll link to the Investopia, or the articles that you mentioned, so people can take a look at those. But also, we'll direct them to you. We'll put a link to your website so that they can find you. Look, if you're considering buying a mortgage, buying a house, getting a mortgage, there are options out there. And Brad can help you understand those and help you figure out which one is best for you. Brad, Sea of Kentuckiana Mortgage Group, thanks for joining us today.
Thanks for having me, Mike. Have a good day.